Welcome to this video tutorial from Business Gateway. In this session we'll be looking at bookkeeping essentials. We'll be guiding you through the essential considerations you have in making sure you keep account of all your money in and money out. The tutorial's goal is to enable you to consider what you need to consider when doing your business bookkeeping. We will cover the following: the basics, capital and revenue costs, statements, bookkeeping systems and expenses, basically what you can claim. Bookkeeping looks at every transaction that takes place in the business, identifying what each one is, categorising each transaction into its correct place, and then recording them correctly into the ledgers. You do require to record all transactions that have a financial implication. Now, this can be from customers who buy products or services, through to employees who are paid wages, PAYE, national insurance and pensions. We look at those who sell as services or equipment to allow our business to function. Government agencies who you need to make sure that you're meeting all tax related requirements, from national insurance, payroll taxes, VAT and income tax. And then you consider how you will fund the business. Now, this could be funded from your own money or an investor's money, through to gaining lending from a bank or another financial institution. Every one of these requirements require transactions to be entered into your accounts. The concept of a business keeping accurate records is not a choice. You legally must keep accurate records. If you're ever unfortunate enough to have an HMRC investigation, they will be interested in the process you have to accurately record transactions. And that's pretty much the first thing they're going to look at. That you must have sufficient identifying detail to recognise the expense is legitimate, and that goods sold and purchased should have details of the buyer and seller. By having this level of detail, you'll be able to analyse your cost to a greater degree, understand your gross and net profit, and improve overall decision making. There are two types of costs you need to think about and categorise your transactions. Direct costs, or costs of sale, the nuts, the bolts, the wood, the raw material, and also the employees involved in making the product or delivery of the service. And the second type are overheads, the day-to-day operational costs, the phone costs, the stationery, and the rental of an office or warehouse or similar. So record every purchase you make, and basically from a paper clip up. This will include raw materials, goods you have purchased to resell, advertising and marketing costs, utility bills, and all types of stationery and printer ink. If you use cloud accounting, which is a way in which you use software to support your bookkeeping, many of the invoices you need to keep can be kept electronically and attached to the cloud accounting software. If not using cloud accounting software, please ensure you can trace the receipt from every cost that you enter into your business and can show where it's been paid out of, whether it's out of the bank or out of the cash book. Capital expenditure is a specific part of bookkeeping. If you buy an asset that will last more than 1 year or assist you in generating sales for more than 1 year, then it is a capital asset. This cost cannot be directly charged to your profit and loss account. You charge it to the fixed asset code on your balance sheet and depreciate over its useful life. If you buy a van that is, say, worth £9,000, you will use it over 3 years, and the residual value or final value will be zero. Then you depreciate that at £9,000 divided by 3 years equals £3,000 per year charged to your profit and loss account. The two main statements are profit and loss and balance sheet. This is an example profit and loss account for a sole trader. You will see they have sales income of 110,000, purchases of 70,000, and a range of overheads such as computers and insurance. They make a net profit of 24,000, and this is what would go into the self-assessment and is the value used for tax purposes. The balance sheet shows the company's assets and liabilities. These could be items such as debtors, those who owe you money, creditors, those who you owe money to. It could be stock or fixed assets such as machinery, as well as long-term liabilities such as mortgages or longer-term loans. An example balance sheet is on this slide. It's a statement of financial health. It starts with fixed assets and intangible assets, for example, goodwill. Then you have your current assets, which are made up of bank and stock. And that is really the total value you have in your business, but then you need to consider what you owe. So therefore there are trade creditors and a short-term loan. They also have a longer-term loan of £2,000. Therefore the company has net assets of 13,000. The other side of the balance sheet, in this instance a limited company, is an issued share capital of 2,000 and retained profits of 11,000. 2,000 plus 11,000 is 13, and that balances against the net assets. Do you need a balance sheet? No, if you're a sole trader, but it's really good practice to have one. And if you're using cloud accounting, they will automatically be prepared for you. It allows you to know what assets and liabilities you have, the position of your bank current account in cash, and what the business has taken in drawings. In terms of expenses, claim only for the expenses that you incur which are wholly, exclusively and necessary during everyday running of your business. These include office costs, stationery or phone bills, travel costs, fuel, parking, train or bus fares, clothing expenses, for example uniforms, staff costs, for example salaries or even subcontractor costs, things you buy to sell on, stock, raw materials, financial costs, for example insurance or bank charges, costs of business premises, heat, light, business rates, advertising or marketing, for example website costs, training courses related to your business, for example refresher courses. Capital expenditure, excluding cars, can be claimed in the year of purchase if you use cash accounting. And if you use something for both business and personal, you can only claim allowable expenses for the business costs. Starting a business is an exciting journey filled with challenges and opportunities. By understanding the basics of bookkeeping, you get to understand your profitability, if your business is making the right margin, and be confident about the financial position of your business. Hopefully this short video has helped you better understand the basics of bookkeeping. Visit the website for details of all our webinars, in-person events and tutorials. They're all designed to support you and your team, whatever your stage of businesses are.